Meta, or Facebook, was the #1 most purchased security by super investors in Q1 of 2022. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into this one, because this one's very interesting. More and more people are picking up Meta as the share price is coming lower and lower. So you can see here, Meta was the #1 most purchased stock by super investors in Q1 of 2022. But there are some problems that are facing Facebook, at least right now. So you can see here, this is a bit of an older article where shrinking advertising rates are impacting Facebook's core business, so Facebook. But that may actually just be the fact that advertising might potentially be pulling back, as we currently, in my opinion, are in a recessionary environment. But it looks like conditions are more positive on Instagram, where ad rates per thousand, or CPM, have ticked up 15% in May of 2022. But that's probably because Instagram has historically been a lower monetized platform than Facebook. Also, you're seeing a shift of consumer time from the higher monetized platform, which is Facebook, to the lower monetized platform, which is Instagram or Instagram Reels. And so this will take time to work through, but I don't see this as a long-term problem. And there's an analyst who actually called out some of the issues that I think are weighing on Meta's share prices, which is softening e-commerce spending, inflation, and actually reducing consumer time spent online. And in fact, I don't actually think that's a reduction of consumer time spent online. I think that might be competitive pressure, so more people moving on to TikTok. And he says that below in the next paragraph. But with all of those pressures, this particular analyst still maintains a neutral rating and a 220 target price on the stock. So that's very interesting. But the more important thing is what's below. And this is what I haven't really touched on lately. You guys may already know that Apple has made it so that you can't really track people using cookies, or they hide them. So that impacts Facebook's monetization model. However, it looks like Facebook is working on workarounds to deal with it. So one of those items is fingerprinting. And fingerprinting is just an approach to identifying users based on their IP address and other devices and location signals. And it looks like so far, Apple has turned a blind eye to fingerprinting. So I think as time goes on, this becomes sort of like a cat and mouse game, where if Apple clamps down on one thing, Facebook's engineers might develop something else. And so if Samsung does the same thing, then they might develop something else. So it might just be sort of like a cat and mouse thing. But overall, I think that the impacts from it might be more subdued than we think. And so you guys saw that the analyst is valuing Facebook at approximately $220 per share. Where exactly am I valuing Facebook? Well, you can see here that with my free cash flow per share valuation, I'm valuing Facebook at approximately $240 per share without their excess capital per share. And when you throw that excess capital in, I'm valuing them at approximately $260 per share. So I'm saying that Facebook, as of the time of this recording, where the current share price is approximately $160 per share, they're trading at 60% of their intrinsic value, and it reflects a 14.8 times multiple on the current business. But here's the thing. You also have an optionality on this business, because there's a lot of investment going into the metaverse, and that's already taken into account in the free cash flow per share calculation and the forecast for free cash flow per share. So you're already valuing in the capex that goes into the metaverse, but we're not valuing in the potential additional cash flows or revenues that could come from the metaverse. And so there's a huge optionality here. So you might be buying the core business for approximately 60% of its intrinsic value, and you might be getting this whole other ecosystem of business or businesses that could be free and really ratchet up your investment returns with this company. And the other thing that I do want to point out is that Facebook is a really good steward of capital. So you can see here that they are buying back more and more shares in this environment. So you can see that they repurchased $44 billion of stock in 2021, and I don't see them slowing down. And like I say, buybacks are very accretive in an environment where your share price is trading at a price that's significantly under its intrinsic value. And so that's what we have here. And I think they're properly allocating capital to buybacks. So that's very good. And if you want access to that Facebook model and the tracker and all of the other models that the Patreons get access to, you can access that at the lower tier of the Patreons. And like I always say, there's no risk to you, because if you decide that you don't want to continue with it or there's no value to you, don't just cancel after you subscribe. Message me in the app, let me know that you tried it and it wasn't for you, and I'll fully refund your first month subscription, just because that's how much I believe in the product. And up until now, nobody's taken me up on that offer, so that really shows how valuable this is to people. And guys, another company that's being bought up massively by super investors is Alphabet. And I think that's one of the most interesting opportunities, and it's a name that I'm looking to add into my portfolio. And so in order for you guys to get access to that video, you can see it right here.